Hello and welcome to NDTV Profit. We are at the JP Morgan's India Investors Summit, and with me is Sjoerd Leenart, who is the JP Morgan's Asia Pacific CEO. Sjoerd, thank you very much for being on NDTV Profit. It's one of the biggest conferences that you have held in India with the kind of participation that you're seeing.
Yeah, this is our 9th year of hosting this summit, and it's been growing every year. And I think this year particularly, it's taken a growth spurt. I think we have more than 200 corporates present, more than 450 investors, at least half of them international. So I just think it signifies the interest that the world has in India, and to bring people together in a conference like this, have them hear the story, and go back to their countries and design their strategies around it, I think is an important role for JP Morgan to play.
You have a very good view of the Asian market and India within that. How do you see India vis-a-vis other Asian players?
I think Asia is, I've arrived a few months ago to live in Asia, and so you look into the statistics of the region and you can't but be impressed. I mean, Asia represents 35% of global GDP, almost half the population. It's growing on average about 4.5%. Compared to maybe Europe 1%, the US 2.5%. So overall, a region with tremendous opportunity. Within that, India is one of the key focus areas for investors because it has so much growth potential. Done so well over the last 10 years and still has so much to offer in the next decades. So India is a key pillar of our growth strategy in Asia.
Last 5 years have been great for the Indian market, and at JP Morgan, how do you see India, performance vis-a-vis China? Because that's a comparison which has been used in the Asian marketplace.
Yeah, maybe to start with China, I think obviously there's a lot of sort of headlines on China, but we can't forget the journey they've been on. In 2000, they were 4% of global GDP. They made up about 14% of APEC's GDP. Today, they're 20% of the world's GDP, and they're more than half of Asia's GDP. So they've had their growth spurt. But it's clear that when you are so big, to sustain that growth is difficult. And also the drivers of China's growth will have to change. It was a lot about manufacturing and export, then about the sort of e-commerce industry, and the question is what's going to be the next decade for China, what's going to drive its growth. So China, I think, will continue to be a big driver of absolute growth, but at a slower rate than before. In a sense, India has been embarking on a similar journey of growing 6, 7, 8%, and we see every possibility for this country to continue to do that in the next 5 to 10 years.
How do you see China? You spoke briefly about the fact that it's slowing but it's still growing in that sense. How do you see what the next 10 years is going to be? Is there going to be a shift in the way the China growth is going to play out? And if that's so, how will India be able to replace that or take up the space that's been left behind by China?
Yeah, I think everyone is trying to figure out what is going to be the next driver of growth for China. I think that the government. Yeah, I think the government needs to really regain a little bit the confidence of the investor. I think they've been changing a little bit the guidance on the market. They've intervened on a number of occasions with some regulation, and I think it's taken away a little bit of the visibility and predictability for investors. And when you think about investing around the world, what you want is you want to know the rules of the game. You want to know the landscape. And I think that confidence has to be regained a little bit. Obviously, everyone's hoping that the domestic consumption is going to increase because the export-led economy is getting pushback from the world. So it really has to come from domestic. And so the government has to really put incentives in place to stimulate that. There is the real estate situation, which in any country is always, it can drive growth, it can dampen growth, and they're on the wrong side of that equation for the time being. As to India, obviously there is clear diversification going on away from China in the China +1 or China +2. And I think India has had its benefits from it, as has Southeast Asia, for example. But overall, we feel that India can take a lot more of that upside, and that has to do with becoming a bigger part of the global value chain. They're very good in services, and the government is doing a lot to put it on the map in the manufacturing space, and I think we've seen a lot of progress. But as of yet, that is not yet generating as much to growth as it will be in the future.
When you look at the policy from an India point of view, do you see much more clarity coming in the way, the direction, and how the government is pushing Make in India? And as you mentioned, China Plus One or China Plus Two, and India is fitting in beautifully in that narrative.
It should, and it is, and it will increasingly do so. I think the government is essentially putting the building blocks in place to do more of that. But it is, very complex, the whole global supply chain. So to insert yourself into that in certain industries is not a one-year thing. It is a multi-year thing. But the government, if you look at what they're doing in physical infrastructure, building more than 10,000 kilometers of roads, if you see what they're doing on the digital infrastructure, if you see what they're doing in deregulation and simplification of laws, then all these things will greatly contribute to a manufacturing boom that I think is going to come. And that will set India up to become a bigger contributor to the whole global value chain than it is today.
We've seen India's weightage in the MSCI, go up, and it's almost at par with China, especially in the emerging market index. Do you see that India's, given the kind of flows that's coming in, and given the kind of domestic flows that's also, pushing the stock market prices, India's weightage may overtake China going forward?
Well, I think today India is more than 20% of the emerging markets global index. I think China is probably 23, 24%. So they're getting very close. And if you look at the number of companies coming to the market in India compared to China at the moment, and the sort of free float increase that is happening in certain stocks, then I would expect the weight of India to continue to grow, in a sense commensurate with its with its GDP growth, and maybe more than that. So I wouldn't exclude the possibility at all that it will overtake China. Overall, the Indian equity market has been, fantastic to watch. We have probably around 50 billion of supply this year, IPOs, secondary offerings. And that's against the backdrop where the world hasn't been particularly kind on equity offerings. If you look at the world, equity indices are actually quite high, but the ability to put new supply in the market hasn't been that easy in Europe or in the US. India is one of the few real exceptions. So I think we may see as much as 250 offerings this year, and the volumes this year have already exceeded the year-to-date numbers from last year.
And that's what the focus of JP Morgan would be in India, means to focus on new IPOs and new issues coming in?
Well, I think we have a lot of things to focus on in India. So, and that includes investment banking, whether it's corporate banking. We have a big equities trading business. We provide custody services. We're the third largest custodian domestically. So there is a lot to set ourselves up for. There's new developments like Gift City that we're making sure we're investing enough in capabilities there to service the clients that want to use Gift City. But with respect to investment banking, I think equity has been the highlight. Overall, the wallet in the opportunity set for investment banks has grown by about 50% this year in India. But it's particularly been dominated by the equity activity. And there we have a big role to play to tell the story of companies and to bring them to the market. And then on the M&A, I think there is definitely a lot of dialogue. Both Indian companies trying to use their profitability to build out their business, add capabilities. And for international companies, they're obviously in the boards really spending a lot of time on India.
You've been a veteran of corporate banking, and recently you merged commercial banking and into investment banking globally as well because of the acquisitions that you did in the US. Give me a sense of where are you on corporate banking in India, and what is your focus going to be in India for that?
Yeah, there's always two sides to corporate banking. There's the domestic companies helping them largely to go around the world. And then there's the international companies coming to India. And I would say that the business has been so far dominated by international companies coming to India. They want to be here. They need help in navigating the market, managing their cash, managing other risks. So it's been a very, very buoyant business with a significant growth in number of companies coming to this market. When you look at domestic Indian companies, the domestic market is very big, so a lot of them have been historically focusing on the domestic market. But more and more you see them go abroad, and that extends now to a larger group of clients than before. So it used to be the big caps, maybe going abroad. But as the world globalizes, I think a number of mid-sized companies are also needing services in Europe, in the US, in Latin America, in Southeast Asia. So we've definitely extended our coverage of these clients to help them navigate the globe.
What about mid-sized companies? Because what we saw is in the last 2 years, the kind of mid-sized companies and the valuations that they have got, or the market caps increase that have happened in these companies, they've got included into many overseas or global indices, and now they are, looking at overseas market, as you said. Do you see a big opportunity for yourself, and are you setting up a mid-sized, company's desk or or segment here in India to cater to that kind of growing demand for companies looking overseas?
100%. Yeah, we are very focused on the commercial bank, as we call it, which is a mid-sized company. So we're trying to cover the founders of these businesses, and we try to help them navigate the world as they become global players. I think that's partly why investors are at this conference. It's a segment they don't know as well. They know the big famous Indian companies. They don't know that whole segment of next level mid-sized companies, and they're going to actually drive a lot of the growth and opportunities. So both us as a bank, but also our clients, are very focused on that segment.
So my last question to you was, we have seen the Fed hike, Fed rate cut that happened last week, and everyone is asking this question about what is it for Asian countries and emerging markets as a whole. How do you see that change impacting countries in the Asia-Pacific region where you manage many of the countries?
Yeah, I think the Fed rate cut was important. It's important for the US to manage the slowing growth into a soft landing, and we think there's every chance to be able to do that. But you're right to point out it's very, very important for Asia and for the global South in general, because the strength, the rate environment in the US and the strength of the dollar has really impaired the capital flows into emerging markets. So as that comes down, the likelihood that some of the money will find its way into Southeast Asia, into India, will increase significantly. Because remember, in India, for example, a lot of the equity flows this year have been domestic funds. Like 80% has been domestic. So in a sense, the internationals are very, very interesting, but the money hasn't yet moved in size. So I think the rate cut will help to redirect those flows. So I'm excited about that.
So, when you mentioned that 80% is domestic flows and the remaining coming in mainly into new IPOs and issues, do you see the valuations for many of the Indian companies now saturated and the opportunity now coming into the new paper which is coming into the market?
There's a lot of debate about the valuations in India. They're sort of in the mid-20s. But when you put it in the context with the rest of the world, like the US is probably in the high teens. But if you look at the difference in growth rate, 2.5% in the US, 6-7% here in India, then if you fast forward a few years, these valuations are actually quite reasonable for the growth that you're going to get. So we don't personally think that the valuations are in territories that are bubble territory. So I'm hopeful that people will continue to provide these valuations to companies, and it will also drive companies to monetize the opportunity through IPOs, through sell down. So hopefully we'll get more and more companies to come to market, and investors will continue to buy even at these levels.
Sjoerd Leenart, thank you very much for joining us on NDTV Profit. It was a pleasure talking to you today.
Thank you very much.